Hello everyone, welcome to AdiTrade. Today we're going to be seeing the chart patterns and some of the important chart patterns that work for intraday or positional trading. The chart patterns are categorized as, these are all the chart patterns. We'll be seeing the most important ones. The chart patterns are categorized as reversal patterns, continuation patterns, and bilateral pattern, that is either way movements. We'll be seeing all these. First, we'll take the reversal patterns. Now, the first chart pattern that we're going to see is double top. Sorry for the handwriting if it is messy. Now, how this double top works is, consider the market is going up. At some point it starts to reverse, and at this reversal point we would have had a trend line, right, or a resistance line drawn. So again it dips to certain point and then goes up again. At the same point where previously we had taken resistance, the market takes resistance and starts falling down. So this 2 points is referred as double top, where it's a reversal pattern. See, the market was bullish. After making double top, it started coming down. How do we find the targets for this? Is this bottom reversal point, right? We are going to, this bottom reversal point, we're going to draw a line there. So this we refer it as the neckline. This bottom part we refer it as the neckline. So when the neckline is broken with a nice good solid red candle, right, that's when we can enter in this trade. If it's a intraday option buying scalping, we can keep the stop loss as the neckline itself. If it's a intraday trade, we can keep the stop loss as the neckline itself. Consider this as the neckline. And if it is a positional trade, we can keep half of this as the stop loss. See, sometimes we get this breakdown and again we get a retest of this trend line and then we dip again. So even we can wait for the retest, but waiting for the retest is again it's like it might happen, it might not happen. So depending on how good this candle breaks down, right, how solid this candle, the breakdown candle is, depending on that we can decide whether to wait or not. But whenever we get a retest and a good bearish price action, like say an inverted hammer or something over here, then we can definitely take a shot on the downside. And how the target is calculated is, we consider this distance from here till here. Now say this is about 100 points. We measure this, whatever it is. For example, I'm taking 100 points and keep it at this breakdown point. Say the market came here, right, and this was our neckline. So at this breakdown point we keep this exact measurement. I'll be showing you this on the charts as well. And we can keep a target of 100 points, and that's how we get the target. If somebody is trading this on intraday basis in option buying, we can always keep a consecutive target of half of this. So it will be 50 points target. If that is achieved, then the next 50 points. So this we refer as the double top, and this is how the target is calculated. The next reversal pattern we are going to see is the head and shoulder. This also comes quite often in our intraday charts. Head and shoulder, I'm going to put it as H and S. And why head and shoulder, we'll see that. Now say the market is going up, it comes down at a certain point, then again we go up, breaking the previous high, we start coming down, and again we go up but we make a lower high, and then the market starts slipping. So whenever you see a chart pattern like this, we can have the neckline here. This will be the neckline connecting all these points. And why this is referred as head and shoulders, this is like a left shoulder, this is like head, right shoulder, and again at this breakdown we look for a nice good bearish candle. And in the as we go in this series of videos, in the end when we see all the trading setup, we'll be seeing how to identify whether this is a fake breakdown or a good breakdown as well. So when we get this solid red candle, right, we can try and take a short. See what happens again in this type of head and shoulders. Sometimes we get a breakdown and straight away it goes down, or sometimes we get a reversal in the sense like a retest and then it falls. So we'll have to be careful with that. Now how do we find the targets for head and shoulders? We consider this is the head, right? So we consider this distance from the head to the neckline. So the target is head to neckline measurement, and take that and keep it over here. There are tools on the charts where we can use this. I'll be showing you on the charts. Now say this is about 200 points, the distance. Okay, whatever, whether we are seeing it in equity or indices, Banknifty or Nifty. Say this, consider this 200 points. We'll always consider half of this as a consecutive target. So the first target will be 100 points. The next second target will be 100 points. So total together 200 points will be our target. So always we go by this 50% just to be, if say now you find this head and shoulder pattern at 230, breakdown is happening, you go ahead and buy options, you get a nice fall. Now I'm just keeping 100 points, right? Say in Banknifty this is about 250 points fall. So this is very good for option buying, right? When you capture 250 points, this can be a very good scalping. So these are the reversal patterns that we saw. See, the two reversal patterns that we saw are double top and head and shoulder. The next we're going to see is again a reversal pattern, but from bearish to bullish. What we saw right now is bullish to bearish, right? The market was going up, we make a double top or a head and shoulder, then we reverse. That is bullish to bearish. Now we are going to see if bearish to bullish. Sorry for the handwriting. So the first chart pattern that we are going to consider is double bottom. So what this happens in this double bottom is, say the market is falling, it's exactly the opposite of double top. At some point we start reversing. So the moment we start reversing, always we will have a trend line marked, right? Then again the market starts falling, and exactly at the same point previously where we took resistance, the market starts reversing. So these 2 points we refer as the double bottom. And how the target is calculated is the same. We'll have this neckline at this reversal point, measure this distance and place it over here where the breakout happens. Say the breakout is happening here, nice bullish candle. Place this exact measurement here, that will give us the target for double bottom. The next one is inverted head and shoulder. Inverted head and shoulder, that is exactly opposite of head and shoulder. Say the market is falling for some point, then goes up, again comes down, makes a new low, again goes up, comes down making a higher low. We have seen in Dow theory what is higher low, and then here is where we'll have the neckline. So once this neckline breaks out with a nice bullish candle, right? So we consider this, so this will be the left shoulder, head and right shoulder. So we measure this distance and place it here. that will give us the target, and always we go target by 2, T by 2. So that will be the first target, and the entire length will be the second target. That is how this inverted inverted head and shoulders are formed and measured. So we saw bullish to bearish pattern, and we saw bearish to bullish pattern. Now we'll see the other chart patterns that are there. Before that, I'll just mention one or two things. That is, the chart patterns can be seen either in 5 minutes time frame, 15 minutes, 1 hour, daily, and even weekly. Okay, it depends. If you are an intraday trader, we will consider only 15 and 5. If we are a positional trader, we'll consider hourly, daily, and weekly. More on the time frames as we go. We'll be talking about the time frames as well. But the chart patterns can be seen in all time frames. And sorry. See, some of us might have a doubt that we say the head and shoulders like this, right? We have a neckline and break. Should the neckline be flat, or can it be slanting like this? It can be both. It can be, this is more likely to work. This is like 100% perfect if the neckline is like this. If it is slant, maybe, yeah, it's not so perfect, but still we can consider this. Now what is the slant neckline, right? So we know where the neckline is. Say we make this left shoulder, head, right shoulder, we consider this neckline. Okay, so this is a very good chart pattern, like 100% correct. The other possibility is like this. We get a slanting and the neckline will be like this cross. We can even consider this, but this flat neckline is more perfect. If we get a chart pattern like this, this is again the left shoulder, head, right shoulder. Even this can be considered. And the same thing on the inverted head and shoulder, right? Say we get a perfect inverted head and shoulder, and we are getting a flat neckline. So this is good, 100% correct. And we might also get like this. Right, a slanting. So even this neckline we can consider, but it won't be as strong as this. But still we can even trade with this type of inverted head and shoulder pattern. So this double top and head and shoulder is something that happens intraday basis, hourly, weekly, can be used for the intraday trading quite often. That's why I just wanted to explain on that. The other reversal patterns are the rising wedge, which is pretty clear in this diagram. Let me just expand it. So these we don't see quite often, but yeah, it's good to know. Where the market is bullish, okay, then we kind of start making this pattern like a triangle and a rising wedge because it is rising, right? And when this breakdown happens, we get a nice entry we can take, and we can keep this length of this entire length as the target. And the same thing for the falling wedge. Same thing for the falling wedge. See, when the market falls, see this chart pattern is formed like a wedge, right? And in the last section, we'll be seeing about the wave counts inside this, which gives us an idea whether the edge is coming to an end or not. That will be in the last section, but this will be the falling wedge pattern. The moment we get this breakout, this is more like a triangle breakout, right? We get a breakout, we can take this length as the target and keep it at this breakout area and measure. We won't see much of this rising wedge chart pattern. It will be more likely on a higher time frame, but it's good to know. Now comes this continuation patterns. Now what are continuation patterns? See, reversal patterns are the market was going in one direction, we got a pattern, we reversed either from bullish to bearish or bearish to bullish, right? Now these continuation patterns are say we are in a nice uptrend. We had a very good example recently of this continuation pattern. Now why we refer it as continuation pattern is, say we are continuously going up, we are in a bullish, say we are bullish in the market, we are going up, a chart pattern comes over here, and again we get a breakout and the bullishness continues. That's why it's called continuation pattern, because we are continuing the trend. The same thing if we are falling, say we keep falling in the market, we get a chart pattern. Now what are these continuation patterns? We'll see it in the above diagram. Then again we get a break of this and start falling, right? So it is in continuation of the bigger trend, bearish trend or bullish trend. That's why it's called continuation pattern. And what are those continuation patterns? Most of you traders will be aware of it. That is this. Either it'll be, see, basically it'll either be the most common thing will be like either a flag and pole, where you keep going up, form this triangle and then get a breakout. So this triangle can be either a perfect triangle or it can be like a rectangle. Now say you go up, you become sideways shear and then get a breakout. So even this is referred as a flag and pole. The sideways can come even in a triangle pattern or a rectangle pattern or a triangle pattern. Some examples are shown in this chart. We'll be seeing it even on the charts after this explanation. So the continuation are falling wedge, how it is described here. This is the bullish rectangle, what I told. Then this is the, you can just call it as a flag and pole. This is bullish pennant, where you have a proper triangle and then breakout. This is the bullish triangle. Then you have the bearish ones, where in a falling market we again have this rising wedge. And see, this rising wedge, this falling wedge, we get a breakout on the upside and go up. In this continuation pattern, if we get a breakdown, see, if we get a breakdown of this trend line, then we will start falling, right? The same thing on the bearish continuation pattern, we should see a breakdown. We should look for a breakdown. On the bullish, we will look for a breakout of this trend line. And last, we have this bilateral patterns, where we can get a break. See, mostly these bilateral patterns will again be this triangle patterns. Like we will form some pattern inside this triangle, and we can either get a breakout or a breakdown. So if we can spot a nice triangle like this, right, either a proper triangle or kind of this rising wedge, that should be more than enough for this continuation and bilateral pattern. So now we'll be seeing some charts. We'll be going to the charts and seeing some examples. So we'll be seeing some examples on the chart. I've opened the Banknifty 5 minutes chart. See, this was the most recent a chart pattern that worked on intraday, where we had this head and shoulder. Once this breakdown came, see the kind of fall that we got. If we have to measure, we can always take this head to this neckline. This is how we measure, and the measuring will be in this tool over here. Price range, we choose that and keep it over here. Exactly the head and shoulder target hit. So we'll be using this chart pattern targets along with pivots also later on, seeing if not for the entire target, if there is a proper CPR or any other pivot also we can exit. And we also form this, there are two chart patterns here. One is this head and shoulder, and the next is this kind of this double top. See, over here we had this double top. See, in double top, if the wick is going above, we can consider it, but if the candle itself is going up, we cannot consider that as a double top. Here we had only the wick, so we can consider this. And the first target was this reversal, right? See, here we got a beautiful retest of the neckline and then dip. So we got one target, and easily the target was hit. So we had almost two chart patterns on this day recently. And another beautiful, this flag and pole continuation chart pattern was the day before yesterday in Banknifty, when kind of this triangle broke out, right? Exactly at this broke out level. See, we'll be combining the chart patterns along with, see, when we come late to the later part of the video, right? The trading setup, when we are combining everything, we'll be combining everything like CPR, the moving averages, RSI, and then deciding whether to enter or not. So, but the moment this breakout came, see the kind of up move that we got. And this is another example where a kind of this triangle pattern broke down. See, we won't see the exact triangle like how we see in the diagrams given, but most of the times it does work. This was another beautiful double bottom which worked. Double bottom, see how we saw the price, we measured this distance, right, and see easily the target hit. And I want to show you another chart pattern which is not mentioned in the diagram that we saw before. That is called the cup and handle. And I have one classic example of a stock which I have traded based on this cup and handle. This cup and handle is most likely we will see it only on a higher time frame, not for intraday basis, more like weekly or daily is what we consider. See, what is this cup and handle is the chart pattern. We need to find a chart pattern like this. Consider a cup and a small handle. So this is referred the cup part and this is referred as the handle part, and this is again the neckline. So once this neckline is broken, we can enter, and this is a very high probability chart pattern where we'll see on stocks and even indices, but on a weekly or a monthly time frame. It's not best seen on a daily or a. See, this was the cup and handle chart pattern in this JSW iSpan. We had this nice cup handle, and how do we find the target for this cup and handle is the distance between this lower bottom of this cup and this neckline. When we keep it here, there was a beautiful target hit. I have entered this around 40ish. See, when we go to the daily chart, right, it was not easy entering. Every day we were gapping up. See, the moment this cup and handle broke, everybody knows what this type of pattern is, right? It keeps gapping up 5%. There's hardly any chance to enter. Luckily, on this red day, when we got a dip somewhere close to 37.40, I think this day I entered and got out when the circuit opened on 61. So this is a cup and handle chart pattern. There are many stocks which like this penny stocks. If you see, you will find this cup and handle chart pattern which has worked beautifully. Now some of the other stocks that I follow where I've seen a couple of good chart pattern are Tata Motors is one which we had a nice double top long back. See, this was in Tata Motors. This was a nice head and shoulder breakdown, and see the kind of fall that we got. Few months back we had a nice double top in, yeah, this was the double top. See, in Tata Motors we made a double top at 595 and then started slipping. See, a lot of people over here who don't know about this chart pattern would have thought now this is going to break out and go to 1000 or so, but the moment this like a long wick came, that itself was confirming that this was a double top. Obviously I didn't trade this. Now why I didn't trade this, because I don't trade in stock options. It's only futures I trade in, or equity investment. See, for equity investment we don't see the bullish to bearish reversal, right? We look for, see, this was a bullish to bearish reversal. So when you want to buy your equity investment, you don't see this chart pattern, right? We see, what do we see? We see bearish to bullish. So this is something that I didn't want to trade, but I had that. Let me see if I can remember some more. And another cup and handle beautiful was this. Tanla platforms. See, how do you find the stocks is you'll have your scanners from different brokers, right? So using those scanners, you can see that volume breakout and all that. And then see, whenever you make use of this other external factors to get the stock, obviously we'll have to do our own analysis. So somewhere here we got this like a volume breakout in one of the scanners. Let me show you on a monthly time frame because it's all extended, right? So we had this beautiful cup handle, and we kind of, this looked like a fake breakdown, but when we see the daily chart, my entry was in hundreds. So when this cup and handle broke, and even when this high broke, my entry was somewhere in hundreds. And since I didn't know much about the stock, or it looked quite new, I had to exit early. Sorry, this chart is not responding. See this measurement, and exited at about exactly when this target hit, and again re-entered. But see the kind of move that I know a person who's still in this, and he's still waiting. He bought at the same time that I bought at about 100, but I exit early based on the target. But just imagine, this went all the way until 2000. Again I entered somewhere in 300s and made some money, but now I'm not into this. It's already too overextended. So that's how these chart patterns work. So hope this was helpful. This was just a general video on the chart patterns and how we trade. So as we go deeper into the videos, right, and especially trading the setups, we'll be seeing how to apply these chart patterns and decide whether to take a trade or not. We'll be seeing even that. Thank you for watching.